Make room for the things that matter by removing everything that doesn't. That's what we do every day here as we use our charts. We hone things down to what matters. And what matters is being able to accurately follow price movement. That is what we strive for. That is why our charts are as simple and direct as they are. Think about what we try to do every day. We try to follow trends. We look for changes in trends that we see on our charts when we have weekly vertical crossovers. We are also looking at the way the 2-day chart is performing in addition to the weekly and along with the weekly. And of course, our smallest chart that we typically look at is the 4-hour chart. We are tracking constantly price changes. We are attempting to separate the signal from the noise. The noise is everything else going on. The signal is price movement and where that trend is. We trend follow. We find that the larger the trend, the more dollars there are that change in price, which means your practice trades will be more successful when they work in that you have larger dollar amounts. How do we keep from losing? Of course, we cut our losses as soon as possible with the loss limits that we set when we get into a trade. So again, want you to practice with us every day. It costs you nothing to practice with us every single day, except 10 to 15 minutes, but you have to do it every day. We track the S&P 500, the NASDAQ 100, 20-year bonds, and gold. Just what you need to understand what the stock market, the bond market, and the commodity of gold are doing every single day. 10 to 15 minutes, that's all we ask. Hadn't purchased our book? Do so. It is available. You'll see a link in the show notes. If you are not a subscriber, then of course you're not going to get the training we're putting out today. Subscriptions are free. Go to chartingwealth.com and sign up. We have a great training for you, another new training. Every single day we have put them out for you in the last, week or so. This is going on like training number 7 or 8. The trend is the key. I want you to have that. You'll see a link in your show notes if you are a subscriber. So again, easy to be a subscriber. Just go sign up. We're going to jump into these charts right now. Get out your daily market worksheets. A PDF is available for free in the show notes. Print those out, follow along. And always, when you do practice trades, use the trade worksheet. Let's jump first, as we always do, into the weekly chart, and the S&P 500 is depicted by SPY, the Spiders S&P 500 Trust Series Exchange Traded Fund. We see that we have an up week continuing to form 2 days into the 5-day candle, pushing through the Bollinger Bands. Remember, Bollinger Bands are volatility bands, and the further apart they get, the more volatility you see. The tighter they get, you get the Bollinger Band squeeze, and typically once that happens, at some point, things pound out of that. And of course, what we see happening is up movement occurring. Looks like we'll probably have a crossover on the S&P 500 by the end of the week, but we're going to wait and make sure that happens. Looked like it was going to happen back on the 20th of September. It didn't. It did not happen. If you had jumped in prematurely, you would have gotten hammered when the market rotated over going down. So again, we're going to wait, see what there is to see there. Price down a little bit for the day, 0.03% after a big up Monday. We go from the weekly and we see again the price percent oscillator moving up, derivative oscillator moving up. 2-day chart, we had a crossover back on the 18th. Price is still well above the 2-day trend line. Price percent oscillator heading up, derivative oscillator gaining upward momentum. We go to that 4-hour chart, and we can see where things have been pretty much around the same point once things pounded up on Monday morning, sort of slipping sideways. So we'll watch. Derivative oscillator lost some momentum at the end of the day. Derivative oscillator lost some momentum at the end of the day. Price percent oscillator is flat. So we'll watch. There is no trade because the 2-day trend line is going up and the weekly is going down. So we have to have both the weekly and the 2-day price percent oscillators moving in the same direction. Until that happens, we don't have the potential for a trade, but we did have, at the end of this past week, the Qs, the NASDAQ 100 crossover going up. We have a strong up candle that's still forming above the Bollinger Band with a wick higher than that. Derivative oscillator gaining upward momentum. Price percent oscillator heading up. Go to the 2-day chart, weakening a little bit. And of course, we had the 2-day, this is just the first day of the latest 2-day candle. It'll finish drawing on Wednesday. And when we look, we're going to move the price percent oscillator weekly vertical crossover line over, and we're going to see, as you look at last week, you can see that it reached a high of 197.83. So far, 197.54, so we've not reached a higher high so far this week. We do have the body of the candle is further up, but the top of the candle has not reached a higher high. That is the wick. We do see the price percent oscillator still heading up nicely, derivative oscillator moving up. We go from the 2-day to the 4-hour. Now again, Q's down for the day, 0.77%. We had that crossover occur going up on the 4-hour chart, of course, prior to the weekly vertical crossover that occurred. That occurred on Friday. And we had our jumping in point at 3:55 on Friday afternoon. And I have attempted to reset the weekly vertical crossover. Looks like I set it at the wrong time. Let's just make sure. Not a good idea. Always remember, when you're setting your weekly vertical crossovers, always set them on the weekly chart. Don't try to do it on the 2-day. Unless it's, of course, a 2-day vertical crossover. Now we've got that set straight. Go back to the 4-hour. And, of course, we had our jumping in point on Friday afternoon at 3:55. Things were up Monday and have lost some momentum. Now, you might be saying, wait, what's going on? Things pulled back on Tuesday. Yes, they do. So what do we do there? We drop back. We take a look at the 2-day. Still nice and strong. Still doing well. Don't like the fact that we've not reached a higher high. But the price percent oscillator still heading up, derivative oscillator still heading up, and the weekly chart is still decent also. So again, things are okay there, not going to panic or lose our minds. Remember, we have our loss limit set, and we still have our bigger charts moving in the right direction. So we'll continue to watch, see what there is to see as things develop. Now we're going to go to the 20-year bonds that we track. They were up just a little bit, 0.07%, going into what looks like a third week of strong down movement, stair steps moving down. Nice connection point for 3 candles going down. And again, we don't want to connect it to this latest candle until it's completely formed. You'll find it moving around on you as the charts move. But we see that the derivative oscillator has gained a little bit of momentum so far this week. Price percent oscillator heading down, so things are looking good for continued down movement. On the 2-day chart, same here, except we've, of course, not reached a lower low yet. First day of this latest 2-day candle, price is below the 2-day trend line, which is good to see, well below the weekly. We do want to see a greater bottom there. That's the only problem that I'm seeing so far. And of course, we see where things have slackened in their down movement, up a little in the morning, down some in the afternoon. Price percent oscillator is less than flat on that 4-hour chart. Derivative oscillator gaining downward momentum. So continue to watch TLT if you're still in that trade, of course, or if you jumped into it yesterday afternoon after that morning down candle. Continue to monitor. Again, drop back to your 2-day and your weekly to give you some idea as to how strong those trends are, and they're still decently strong for down movement. So again, watch those. Pay attention to your loss limits as well as your profits that you put in with your good till canceled sell order when you initiated your down practice trade. And again, if you're just doing this via paper and you don't have a virtual trading platform, then of course, make sure that's noted on your trade worksheet. Pay attention to it. That's where we are, folks, as we go from bonds to gold. Gold down for the day, 0.28%. Price percent oscillator heading down on that weekly chart. Have basically not quite a doji, a red down candle with a long wick on the bottom, little bitty wick on top. Price percent oscillators lost a little bit of downward momentum, but derivative oscillators lost a little bit of downward momentum. Price percent oscillator still heading down. 2-day chart shows us first day of this latest 2-day candle is decidedly down after 2 prior up candles that we talked about yesterday, how we had some problems with. So we'll continue to watch and see how that 2-day chart develops. Price percent oscillator heading down. Derivative oscillators just about flat. Look at that 4-hour chart. We see down movement in the morning, bit of a recovery in the afternoon, but did have a crossover going down at the end of the day. Interested to know how and if any of you played that, since you already had your 2-day and your weekly in confirmed down moves. So we'll wait and see how, again, these charts sort themselves out. Just to recap a little bit, on that weekly chart on the S&P 500, waiting to see if we have a crossover going up at the end of the week. We have a confirmed crossover going up on the Qs at the end of the prior week. Have a practice trade running in that. Same with 20-year bonds. For those of you who are still in the initial move back many days ago that has been extremely successful. Those of you who jumped into the latest one, see how that plays out for you. Same with gold as far as the down move initiating. Gold has been tough here lately as it's sort of swung back and forth, as it's really gone what? Sideways as we look at that weekly chart. That's where we are as we end the day. I want you to take that training. The trend is the key. You'll see it in your show notes. For those of you who are subscribers at chartingwealth.com, if you've not purchased our book, then buy it. It explains to you what we do. We'd love you to have a copy. We have signed, autographed copies for you standing by. Follow the link in the show notes. If you live overseas, for some reason, Square will not clear your overseas credit card. So guess what you do? You email me, cw@chartingwealth.com. We'll get a book out to you wherever you are in the world. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.